Have you ever bought a stock only to watch it crash immediately after, or sold in panic and then watched it skyrocket the next day? If yes, you're not alone. Millions of retail investors feel like the stock market is rigged against them. And honestly, sometimes it really does feel that way. Because while most retail investors are trading with emotions, the market is being controlled by professionals, people with massive capital, algorithms, insider psychology, years of experience. And one thing most retailers lack: a plan. But here's the truth most people never realize. The market is not designed to reward ignorance. It rewards preparation. And the good news: you don't need billions of dollars to win. You just need to stop playing the game like an amateur and start thinking like the people who actually move the market. Let's be honest, retail investors are at a disadvantage. The stock market is dominated by institutional investors, hedge funds, market makers, high-frequency trading firms, professional analysts. These people spend every single day studying market behavior. They have teams of economists, data scientists, and traders. Meanwhile, many retail investors buy stocks because a YouTuber mentioned it, Twitter is hyping it, a friend said, "Bro, this stock will moon." Or because the stock already went up 50%, and that's exactly where the trap begins. The market feeds on emotion, fear, greed, FOMO, panic. Professionals know this. They know where retail investors place stop losses. They know when people panic sell. They know when greed takes over. And many times, price movements are designed to trigger emotional reactions. That's why beginners often buy at the top and sell at the bottom, not because they are stupid, but because they are reacting emotionally in a game controlled by disciplined professionals. Think about the stock market like a vegetable market. Imagine you go to a local market to buy tomatoes. Now imagine two types of buyers. The first buyer walks in blindly. He sees a crowd around one shop and assumes, these tomatoes must be good. So he pays the highest price without checking quality. The second buyer behaves differently. He checks freshness, weight, market demand, seasonal pricing, alternative sellers. He understands value before paying. Now ask yourself, which buyer is more likely to get a better deal? The same thing happens in the stock market. Most retail investors chase stocks after they become popular. By the time the news reaches the public, professionals may already be preparing to sell. Retail investors often buy excitement instead of value, and when price drops, panic begins. But professionals, they wait patiently. They buy when fear is high. They sell when greed is high. In other words, retail investors react. Professionals prepare. Let's talk about market makers. Market makers provide liquidity to the market. Without them, trading would become chaotic. But here's something important. Market makers understand human behavior extremely well, and markets move because of psychology. Here are common traps retail investors fall into. Trap 1. Buying breakouts too late. Retail traders see a stock exploding upward and jump in emotionally. Professionals who bought earlier may already be taking profits. Result: retail buys near the top. Trap 2. Panic selling. A stock drops 5%. Retail investors panic and sell. Then suddenly, the stock reverses and rallies higher. Why? Because weak hands got shaken out. Trap 3. Overtrading. Many beginners think more trades mean more money. In reality, more emotional decisions usually mean more losses. Professionals often wait days or weeks for high-probability setups. Now here's the most important part. If markets are dominated by professionals, how can retail investors survive? Simple. Stop fighting professionals and start learning from them. Here's a step-by-step roadmap. Step 1. Stop treating the market like gambling. Most beginners enter the market wanting quick money. That mindset destroys portfolios. Professional traders think differently. They focus on Risk management * probability patience discipline. Your first goal is not getting rich. Your first goal is survival. Because if you survive long enough, experience compounds. Step 2. Learn fundamental analysis before buying a stock. Study revenue growth, profit margins, debt levels, cash flow * industry trends, management quality. Ask yourself, would I buy this entire business if I had the money? Don't buy stocks because they're trending. Buy strong businesses at reasonable prices. Step 3. Learn technical analysis. Charts reflect psychology. Learn support and resistance trend analysis, volume behavior, market structure, risk-reward ratios. Technical analysis helps you understand timing. Fundamentals tell you what to buy. Technical analysis helps decide when to buy. Control your emotions. The market is a psychological battlefield. Fear and greed destroy more portfolios than bad analysis. Successful investors develop emotional discipline. That means no revenge trading, no panic selling, no FOMO buying, no impulsive decisions. Patience is a competitive advantage. Think long-term. Most wealth in the stock market is built slowly, not overnight. Many retail investors quit too early because they expect instant success, but compounding needs time. The market rewards consistency more than excitement. So, is the stock market rigged? In some ways, yes. The market is dominated by professionals with more experience, more capital, and better tools. But that does not mean retail investors cannot win. Because the biggest mistake retail investors make is trying to beat the market makers instead of understanding them. The smartest investors don't fight the system. They study it. They follow money flow. They manage risk. They stay patient. They think long-term, and eventually they begin moving with the market instead of against it. Remember this: the market transfers money from the impatient to the patient. If you can develop discipline, knowledge, and emotional control, you can absolutely succeed. Not by acting like the crowd, but by thinking like the professionals. If you found this video valuable, hit the like button and subscribe for more deep insights into investing, trading psychology, and wealth building. And comment below, have you ever felt like the market was trapping retail investors? I will see you in the next video.